Hello friends, in the series on the income tax cases, today we will discuss an issue regarding the additions which are being made by the Revenue Department nowadays just on the basis of the statements of the various entry operators, and whenever the revenue just for the formality's sake issues the notices under section 133 subsection 6 to do the cross verification of the transactions, and when these notices are not being served, or when these notices are being served they are not being replied by the various parties, then it has become a practice that the revenue is taking a negative view against the assessee without taking any action against those creditors who are not giving any reply to those notices or without doing any verification. So in such a situation, when the due procedure of law is not being followed up, what is the fate of those additions and at what level the assessee is getting the relief practically? This issue has been taken by Honorable Kolkata ITAT A bench in the case of Iris Clothing Limited versus Deputy Commissioner of Income Tax. This case has been reported in 110 ITR Tribunal at page number 266, and the date of the judgment is 2nd January 2024. In the present case, the assessee is a limited company. The assessee has taken unsecured loans of an amount of 3.4 crore from 12 parties, and the assessee has also paid the interest on those loans of rupees 17,85,000 during the year, and the TDS has been deducted on that. The interesting fact is that these loans have also been repaid by the assessee in the due course. The assessee was asked to prove the identity, creditworthiness and genuineness of these transactions. The assessee filed all the documents which were sufficient, rather than more than sufficient, to prove the genuineness of those transactions, like bank statement of the assessee, bank statement of the creditors, balance sheet, profit and loss account, memorandum, master data of those companies, and various other documents were submitted by the assessee. The learned assessing officer, without finding any fault on these documents and to cross verify these transactions, the assessing officer issued notices under section 133 subsection 6 to all the 12 loan creditors. 6 notices were being served, but the 6 notices were not being served on those loan creditors. The assessing officer immediately made up his mind to take a negative view against the assessee by explaining in the assessment order the modus operandi of taking the accommodation entries, and on the basis of the statements of 3 persons, and without giving the assessee an opportunity to cross-examine to confront those statements, made the additions by making the generalized allegations on the assessee. This is the modus operandi of making the additions nowadays in all the assessments. Whenever the department has any statement, and sometimes the situation is that in those statements the name of the entity of the assessee is not there, the name of the assessee is not there, even it is not elaborated by the department whether these amounts which are coming into the books of the assessee, whether the assessee is the beneficiary of those transactions or the assessee has paid some amount to those entities. Even these are not mentioned. Even sometimes it is not mentioned whether the assessee has purchased something from them or sold something to them, but by making the generalized allegations, the additions are being made. When the matter came to the tribunal said that in the present case the assessing officer has miserably failed to make the further investigation, and the additions cannot be sustained without making the further inquiry, and just on the basis of the statements which do not have any evidentiary value without any corroborative evidence. Corroborative evidence means that the evidence should be there that the assessee is the beneficiary, the assessee has paid the cash to them and has taken the accommodation entries. There should be some paperwork, there should be some inquiry on the part of the assessing officer, but just on the basis of the statements and by generalized allegations without any evidence about the receipt of money by entry operators from the assessee, the additions cannot be made. The tribunal was also of the view that in the present case the assessing officer must examine the issue in the hands of the other creditors from whom the amount has come, and if the assessing officer is not satisfied, then it was the duty of the assessing officer to make the additions in those assessees, or the revenue should have made the additions in the hands of those assessees. Friends, this is a very good case as far as the understanding of section 68 additions, and this is a very balanced judgment because nowadays the quality of the assessments are very poor and the assessments are made just in a period of 2-3 months. When the assessing officer issues the notices for making the assessments, then they sleep over the assessments for 6-7 months, and at the fag end of the assessments they just wake up, they issue the notice hurriedly by giving the time of 3-4 days, and just to complete the formality they issue the notices and make the additions. So these type of additions should not sustain as in this case, and the additions have been deleted by the Honorable ITAT Kolkata A bench. The name of the case is Iris Clothing Limited versus Deputy Commissioner of Income Tax, and this case has been reported in 110 ITR Tribunal at page number 266, and the date of the judgment is 2nd January 2024. Thank you, friends.